We're just getting some GDP figures out of the UK economy for the first quarter, much worse than expected. That number is coming in at 0.1% in the first quarter. The estimate economists we had spoken to were expecting a 0.3% figure. So this is what I'm looking at for British pound, 138.29. Now, this GDP number, of course, gives us some insight into Mark Carney's thinking about whether or not the MPC will hike next month. Investors are also looking out for his speech at 3 p.m. London time today. Let's get back to our guests, Diana Amoa from JPMorgan Asset Management and Ralph Preuser from Bank of America Merrill Lynch. Diana, when you look at this economy in the UK growing 0.1% in the first quarter instead of 0.3%, now I need to really dig down because this is the worst quarter since 2012, but I think a lot of it has to do with snow, right? So it's always seasonal effects, and you had a couple of days where I guess people couldn't go to work or some of the roads were closed. Overall, though, are you worried that, Mark Carney guided the market towards no hike? And if he does hike, it means the BOE has a communication problem in May?
I think Mark Carney is stuck between a rock and a hard place in as far as monetary policy goes. They had been operating on the basis that they would need to be hiking with the impact on the pound that we've seen. But what we've seen in inflation is actually some of those effects, pass-through impacts, are now fading out of the data. So inflation is moderating. We're going through this soft patch with the data, which is mostly, I'm sure, weather-related. But like yourself, we need to dig through the numbers to see. I suspect in the next policy meeting, they will spend as much time as the ECB trying to figure out whether this is something more meaningful that they need to be concerned about, and perhaps less time discussing whether they should be hiking. So I think it's still up in the air for them. I'm not sure it's a done deal that they'll hike.